Hey everybody, this is going to be a brief recap of the Emini 5-minute chart for Friday, January 24th, 2025. So going into the day, we had this big bull breakout at the end of yesterday. And that's strong enough that it's probably going to get some sort of second leg. We pulled back into the close, and then today on the open, we got the second leg. Now this is sort of a minor second leg, so there's a brief pullback, a high one, but look at the price action. We have a pause, so a gap up and a pause on bar 1, trend bar on 2, another pause on 3, and then another buy climax on 4. So that's already 3 pushes up. It's already leg 2, 1, pull back, 2. So we're probably going to pull back for at least maybe 10 bars and a couple of legs. But then we got bar 7. 7 was a big bear bar, a little bit of a surprise. Weak follow through, but still strong enough that there's going to be some sort of reaction. We have trapped traders above, and we're probably going to get a second leg down. Because bar 7 broke out below the bars to the left, we have a breakout point. For example, the bar 6 low. And give me just one moment. Here's the bar 6 low. That's one of the breakout points that bar 7 broke out of. And you can see what happened on bar 8. It came back and retested that breakout point. I'm not sure if you set a limit order to sell at the low of bar 6, whether you would have been filled. And this is sort of a zero height micro gap. The micro gap isn't all that strong because it's a bull bar, then a bear bar, then another bull bar. And it's a zero height, which means there really isn't a gap. There's the low of bar 6 and the high of bar 8 are at the same price. It's still a micro gap, but because they're at the same price and because they're bull bars in a bear breakout, the gap could be stronger. But still, bar 7 would probably get a second leg, and we did. We got a spike in channel. And down to bar 12, it's already 3 legs. 7, pause, 9, pause, and then 12. So what about buying above bar 13? Well, 13 is a small bar. It's an inside bar. And the channel down is relatively tight. So if you're buying above bar 13, the bar also didn't close on its high, which is not ideal. If you're buying above bar 13, you're betting on a breakout. You're looking for a breakout of a channel and maybe a test of the highs, whatever it is you're looking for. If you're buying above bar 13, you know you're buying above a trading range bar because it's an inside bar and the bar did not close on its high. So what does that tell you? There were sellers into the close of the bar, so there's not all that much urgency. So maybe not ideal to buy above 13, even though it might be a spike in channel, wedge bottom, and maybe a double bottom with bar 81. The bears try to get a breakout of the wedge bottom on 14, but then had bad follow through, and then bull breakout 16, but tight trading range, so traders sold it. Bar 20, strong enough for a second leg, so traders will probably be aggressive when we get the pullback on 21, and sure enough, they were. We pulled back and tested the breakout point, the bar 19 high. If you sell above 19, think about it. Reasonable thing to do. Not ideal, but it's not ideal because it's a late leg. But you have a 3-bar bear micro channel. Some traders will sell above bar 19, and if you did, you got trapped on 20. So what's a logical thing to do? If the market gives you the chance to exit at break even, you're probably going to take it. And traders took that opportunity on 22, and that provided fuel for the second leg up. Now the second leg was relatively strong. Not all that strong, but it's a 4-bar bull micro channel, and now it's a tight channel since bar 19 or 20. So is bar 25 a good stop order sell? No, there's probably buyers below 25. Now, we might be at the top of the range. Spike, pullback, channel. The start of the channel often becomes the top of a trading range, so probably sellers above bar 8. We try to break out above it, but bars getting smaller, 26, 27, 28. The bars are getting smaller. We also have trapped traders above bar 6, stop order buy above bar 6. If you took the buy, you got trapped on 7, which went outside down, so probably resistance up here too. So momentum is slowing down, and this is a late leg. If you count spike breaks, breakout 20, pull back 22, new breakout, pull back 26, and then a third push up. So when you get this reversal bar, it's reasonable to exit longs below it. Might be a little bit of an aggressive sell, but you're at the top of the range. It's a late leg, and momentum is slowing down, so it's not it's not a super unreasonable trade to take. But a very good entry bar, 30, enough for a second leg down. Because this was a tight channel, some traders bought below 28, which is a reasonable thing to do. If you did that, you're trapped on bar 30, which got minimum follow through. The bull's trying to reverse it, but because 30 was so big, there's probably resistance above, trapped traders above. We could not get to the bar 28 low. We got close to it on 35, but then 35 became a sell to close bar, sort of a second leg trap after a bear breakout that reset the leg count. Then you have one attempt up on 32, and then a second attempt on 35. So sort of a second leg trap where the second leg looks stronger than the first, but you're at the top of a trading range. And then 36, reversal back down. So tight trading range through here. But just think about stop orders and think about if you're a stop order bull, where do you buy again? Do you buy above 36? Probably, or 37? Probably not. 36 might need its own second leg. So you wait for a second reversal, and it just doesn't come, and we just drift down. That's why I like focusing on stop orders. So a new breakout down to 42. Strong enough, we'll probably get a second leg. We pause on 43, we get a second leg. 45. Is 45 going to be a major reversal? No, it's a tight bear channel. Technically, it's a breakout. There's no pullbacks from 40 to 45. So probably a minor reversal. Second leg down likely. Probably at least test the low of bar 45. You can see there was some support during bar 52. We went below 45 and bounced. But again, think about stop orders. If you're a bull looking for a second entry long, maybe you want to buy above 50, doesn't trigger. You see 52 stalling, maybe it's a double bottom, but where's the stop order buy signal? It never comes. And then we get another give up bar. Now 54 might be a late leg. It depends on how you count it, but maybe it's leg 3, 31, 45, 54. Now we're getting a really big and strong looking bear bar, but late in a bear trend. And I say bear trend, but it's more of a bear swing in an overall trading range environment. Big up, big down. So the downside here might be limited. This might be an exhaustion gap, and what traders might do rather than sell the close of this bar. Let me see if I can get this to work. What traders might do is maybe they buy the close or buy below the bar, stop a measured move down, looking for a test of the high of the bar, betting that this is an exhaustion gap and that the gap will close. Inside bar, it's a low 1. Think about if you sold the close of 54 or sold the low tick of 54 and 55 pulled back all the way up here. That's disappointing, and that might create support below 55. So again, the downside might be limited. We might have to go higher to find sellers. We're trying to break out to a new low, but tail below the bar, and then 57 bull bar. That's 3 pushes, 54, 56, 57, and because that's 3 pushes down, it's likely going to cause some sort of reaction for a reversal. So maybe 10 bars and 2 legs. And it's nested because the bigger 3 pushes, 31, 45, 57. And that's what we got. We got 2 legs up, 60 and 65. So what about the micro channel? 65. 3 or 4 bar bull micro channel. What about buying the close? Well, the context isn't all that good. Bear breakout, which got follow through, and now we have a 2-legged pullback. We're getting close to a breakout point, whether that's 52 or 53, somewhere in this area, probably going to be resistance. So while it looks like a pretty decent bull breakout, it's kind of subtle, but it's actually parabolic. So you have a small bull bar, even bigger bull bar. It's also a late leg. Maybe it's leg 2, maybe it's leg 3. Maybe it's 60, leg 1, pull back, 65. Maybe you count the rally to the high of bar 55 as leg 1, leg 2, leg 3. So resistance in this area. So if you're buying, you really need immediate follow through. And look at the sell-off that you're going against. So in reality, this is probably a minor reversal. The best the bulls can hope for is a trading range, and if that's the case, we might be high in the range. Better to look to buy low, and bears will start to sell near the breakout point. Bulls who bought lower will scalp out, and that's what's creating resistance. You can see 65 was a sell to close bar. 66 really disappointed the traders who bought up here. And so on a retest, 67 couldn't even get to the close of bar 65, and the bulls gave up, and we got 2 or 3 more legs down. So even in here, it's really interesting how, because markets are fractal, the more you look at charts and study, you just start to see the patterns repeating over and over because it's fractal. And you'll start to see, like I said over here, bar 7, spike and channel. The channel evolves into a trading range. Over here, 66 is a spike, deep pullback, 67, and then a channel, 3 pushes down, and then it's a double bottom, and we tested the top of the channel. Spike, pullback, channel, and then trading range. So probably buyers at the new low. This was enough to probably convert the market into a trading range. You typically don't get 4 or 5 bar bull micro channels in strong bear trends. Like I said, we had that possible exhaustion gap 54, so this might be the end of the trend, the start of a trading range, and that looks to be the case. So after 3 or 4 legs down, 75 might be a bar that you exit above if you are short and reasonable to buy above it. But if you do, what's your target? Probably the top of the range, not much more. And you can see traders, when we got to a new high, or above bar 65, they took profits, and we sold off again. So for always in today, I thought it was always in long on the open, but after seeing the rally to bar 4, there's really just imagine if you're long, you're going to have this uneasy feeling. It's pausing, it's breaking out, but hardly breaking out. Another pause, another breakout, but big tail. Not ideal price action if you're buying. And then you get bar 7. 7 probably made it always in short, at least temporarily, because 7's probably going to get a second leg down. For me, once you get bar 16, I think it's reasonable to exit shorts above 16. But maybe the channel's too tight and you don't, and maybe you consider this to be, well, it depends on how you count legs. If you're doing spike breaks, we pulled back above 13, second reversal above 15. But certainly above bar 20, I would say reasonable to exit shorts and okay to buy. Might be always in long after bar 20. But then once you get 3 pushes up, 1, 2, 3, reasonable to exit longs below 29 and okay to short. And then 30 confirms we're always in short, probably getting a second leg down. If you sell here, scale in higher, you're probably going to make money. The bulls probably needed at least 1 more bar after 35 to make it always in long. And after that, through here, I'm not sure. Well, certainly we're not always in long through here. Maybe briefly here. But of course, with the context, really not all that ideal. That's the problem with always in a trading range. Once it looks like it's always in long, strong enough breakout for a second leg, you get a deep pullback. But think about it. The bull breakout got a deep pullback, and eventually it did get its second leg. That's going to be it for today's review. Thanks everybody for watching. I really appreciate it. And I hope everyone has a good weekend.